Good morning, everyone. Welcome to the Bank of England's webinar on central bank digital currency. I hope everybody's keeping safe and well. I'm Tom Mutton. I'm the FinTech Director here at the Bank of England, and we're going to discuss the paper that we launched on the 12th of March about central bank digital currency. I should note when we do this webinar that we haven't made a decision about whether or not we would introduce a central bank digital currency yet. And in fact, we're genuinely open-minded. And one of the reasons for this webinar is to get your views, your feedback, your perspectives on the questions we raised in our discussion paper, in the key issues we should be thinking about as the central bank about digital currency, and to really make sure that this is an interactive session and something where we have a really lively debate. I'm joined by my colleagues, Ben and Manisha, who are in the digital currencies team at the Bank of England. These are the bank's real experts. In fact, I say internationally recognized as experts as well. And they will be taking you through our thinking and making sure that you are given the sort of deep insights into what we're thinking about on digital currency in the Bank of England. We want this to be a very interactive session. We will have polls, we'll have Q&A, and we want to leave a lot of time to hear your views, to take questions and to have a debate. So please do submit your questions through the platform on the webinar, and we're already seeing some coming through, and we're really looking forward to discussing those questions. So with that, I will hand over to Ben, who's going to kick us off by explaining about how the bank is thinking about CBDC, the opportunities and the challenges.
Thanks, Tom. So the Bank of England is the UK's central bank. We have a mission and objectives that are set by Parliament, and these are to promote the good of the people of the United Kingdom by maintaining monetary and financial stability. So in practice, that means that we work to ensure that the value of the money that you use is stable. So this is monetary stability. We also work to keep the financial system as a whole stable. That's financial stability. And doing both of these helps to support the wider economy. So what this means is we have a very significant role in money and payments. So firstly, we issue money. There is the banknotes that you will all be familiar with. The Bank of England actually issued a new £20 note just a few weeks ago. And we also issue electronic money, known as central bank reserves, which are used by certain banks and financial institutions. Then we also ensure that payment systems in the UK are resilient and reliable. And we do that, firstly, we run one payment system called real-time gross settlement, or RTGS. And that, in simple terms, RTGS sits underneath some of the payment systems that you might use on a day-to-day basis, such as faster payments or BACS, and also underneath some of the card systems. RTGS allows financial institutions to pay each other, and every day it processes around 600 billion of payments. So that's an amount equivalent to a third of the UK's annual GDP every single day. And then we also supervise some of the other payment systems that you use, such as fast payments, BACS, and some of the card networks, when they're considered to be systemically important to the UK economy and to the financial system. So right now, money and payments are changing significantly. Firstly, fewer people are making payments in cash. So in 2018, around 28% of payments were made using cash, and this is predicted to fall to just 9% of payments by 2028. Now, that obviously means that we're making many more electronic payments, particularly by credit and debit card, as you can see in the graph here. And in the past, electronic payments used to be provided almost exclusively by banks, and through card payments that connect to bank accounts. But now we have a much more mixed payments landscape. So we have a range of fintech firms coming in to provide alternative payment services. And there are also new types of payment and money on the horizon, such as global stablecoins. So all of these developments mean that it's the right time for us to be thinking about the future of money and whether we, as the Bank of England, should consider the type of money that we provide to the public. So let's just talk about how CBDC, central bank digital currency, would compare to other types of money. So as I mentioned, the central bank provides two types of money, banknotes and reserves. You can see these at the top in the graphic here. Banknotes are available to everybody, so we say they're universally accessible. But reserves, the electronic money that we provide to banks and certain financial institutions, are not universally accessible. What that means is if households want to make electronic payments, they do so mainly by using bank deposits. And bank deposits are just essentially your current or checking account with a commercial or high street bank. So where a CBDC is different, so you can see a retail CBDC here in the center. Unlike cash, CBDC can be used to make electronic payments. Unlike commercial bank deposits, CBDC is issued by the central bank, the Bank of England. And unlike reserves, anybody could use a retail CBDC. So for that reason, we define CBDC in this way. We say that CBDC would be an electronic form of money issued by the Bank of England, which can be used by businesses and households to store value and make payments. £10 of CBDC would always be worth the same as a £10 banknote. And this is not a cryptocurrency. Its value would not fluctuate in the way that Bitcoin does, for example. That said, we may wish to adopt some of the useful technological innovations from the distributed ledger technology that underpins cryptocurrencies. And we'll come back to those technology questions later in the webinar. So with that, I'm going to hand over to my colleague Manisha, who will talk about some of the opportunities that central bank digital currency might pose.
Great, thanks, Ben. So there are a number of ways in which a CBDC may support monetary and financial stability, and our paper outlines 7 of those opportunities. So a central bank digital currency could support monetary and financial stability by supporting a more resilient payments landscape through the introduction of a new payment rail. It may also provide safer and more trustworthy payment services than new forms of privately issued money-like instruments. And a CBDC could also support households and businesses in making fast, efficient, and reliable payments, benefiting from this new innovative, competitive, and inclusive payment system. Now, in this way, a CBDC could also help to meet future payment needs in the digital economy, harnessing the potential of smart contracts and programmable money, and enabling the private sector to create products that support greater choice for consumers. And this would be building on our ongoing renewal of the RTGS service, alongside other private sector initiatives that are ongoing. Now, a CBDC would also improve the access and availability of central bank money, and this may be especially important in the future as cash usage declines. And lastly, it may also provide a building block for better cross-border payments in the future. So now we'd like to come to our first poll of the webinar. It would just be interesting for a moment to take a quick poll to see which opportunities you all see as the key use case or benefit that a CBDC may bring. So which of the opportunities of CBDC presents the greatest benefit? Firstly, making payments more resilient, competitive, and innovative. Secondly, avoiding the risks of new forms of private money creation. Thirdly, meeting future payment needs in a digital economy. Fourth, improving access to central bank money as cash use declines. And lastly, as a building block for better cross-border payments. I think you should be able to see the poll now to vote.
So thank you, Manisha. It's Tom here. I'm just watching the results come in. So it's quite a large webinar, which is great. So it will take a little while for the results to come through, but about 70% of people have voted. So we'll give you the results in a second. So there we are. There's the results. As you can see, the meeting future payment needs in a digital economy is out in front, which I think we very much see as being an important use case to explore for digital central bank digital currencies. Clearly, as the economy becomes more digital, this is going to be a really important feature of our financial lives. Behind that, making payments more resilient, more competitive, and more innovative, something which is really central to the work that the Bank of England does across all types of payments, whether it's existing payments technologies or whether it's thinking about both private and public sector innovations which may come in the future, including central bank digital currencies. Then in third, as a building block for better cross-border payments, the way we're approaching central bank digital currency is to see it as principally a matter for domestic payments, but with the possibility that interoperability and connections between central bank digital currencies in national currencies which may exist in the future could be a really interesting aspect for improving cross-border payments. But there's an unanswered question around whether that would be better than the existing cross-border payments technologies, many of which are very well established. And then kind of the final ones are improving access to central bank money as cash use declines. We've been very clear at the Bank of England that cash is important to many people's lives and will be available for as long as people want to use it, although recognising that payments patterns are changing, not least at the moment, given COVID, and also avoiding the risks of new forms of private money creation. Financial stability, monetary stability is absolutely core to what we do in the Bank of England. So really nice mix of responses there. I'll pass back to Manisha and Ben, who will take us through some more of their thinking.
Great, thanks, Tom. So I'm going to come now on to the objectives for a CBDC. So firstly, we can appreciate that different types of payments and different users will have different needs of a payment system. And in this light, we have explored a CBDC focused on domestic retail payments in a single currency, pound sterling, for use by households and businesses to make payments. And from this, we have to set an overall objective that any design of CBDC would need to meet. And this also informs the design principles around which CBDC should be designed, which you can see on screen. So based on the bank's objectives to maintain monetary and financial stability, we consider it essential that any CBDC payment system would be reliable, resilient, and secure. But a safe payment system is only useful if people use it, which means CBDC would also need to enable fast, efficient, user-friendly, and inclusive services. And this in turn requires that a CBDC system would be open to innovation and competition and built around the relative strengths of the bank and the private sector. Therefore, for the purpose of this paper, we have taken the following broad objective for CBDC payments: that households and businesses should be able to make fast, efficient, and reliable payments and benefit from an inclusive, innovative, competitive, and resilient payment system. And in trying to achieve this objective, there will always be trade-offs between the design principles outlined, and therefore there are some careful design choices for us to make. So with that, we're going to come to practicalities of designing a CBDC. Now, overall, there are two main elements to any CBDC. The CBDC system, the CBDC itself, which would be the new form of central bank money, and the CBDC infrastructure that allows CBDC to be held and transferred. So we can broadly split design into three principal aspects concerning the functionality, the provision, and the economics, with the design choices made in any one of these three areas having an impact on the choices made in other areas. So we're going to explore the first two of these here. So firstly, functional design is about ensuring that payments functionality of a CBDC would provide a clear benefit for users. So this is how users interact with CBDC, the types of payments they could make, and what further functions could be provided on the system. And decisions here around this could have a particular impact on whether CBDC is user-friendly and widely accessible, and also on the level of privacy in the system. Now, secondly, on provision of a CBDC, this concerns choices around who would do what. And there are a number of ways in which we could allocate the division of labour between private and public sector. And these decisions will have impacts on whether CBDC as a whole is resilient, open to competition, interoperable, and designed around the comparative advantages of the private and public sector. And of course, there'll be trade-offs between these decisions. So before I discuss provision a little bit more, we'd be interested in hearing your views on who should be involved in providing CBDC. So who should be involved in providing the CBDC system, including the user-facing services? 1, just the Bank of England. 2, the Bank of England alongside the private sector. Or 3, just the private sector, but backed by funds at the Bank of England. You should now be able to vote on the poll.
Thanks, Manisha. It's Tom. So the results are just coming in at the moment. We're about 70% again. So we should have the results in just a second, and then I'll take us through them. So here's the results. So pretty clear view that both the Bank of England and the private sector should be involved in providing the services in a CBDC system. And then quite a close run thing between the second options, which are just the Bank of England or just the private sector, but a very clear majority in favour of the bank working with the private sector. Broadly, these map to three different models of CBDC that we've presented in our discussion paper, and also the IMF have presented in some of their papers, with the model which is kind of a public-private partnership model, seemingly the most supported in this group, with the bank and the private sector working together. So back to Ben and Manisha, who'll take us through some more of their thinking.
Thanks, Tom. So in our exploration, we have ruled out a model where the Bank of England would exclusively provide all CBDC related services. As whilst it may provide a reliable, resilient and secure system, it would not meet some of our other desired design principles, including being open to competition and supportive in innovation. An approach executed centrally also will not play to the comparative strengths of the bank, and providing innovative and competitive user-facing services is a relevant strength of the UK private sector, who have ongoing experience in delivering a service for the public, and therefore we would see a significant role for them in delivering CBDC. So instead, our paper focuses on that middle case with both public and private sector participation. So I'm going to hand back to Ben now to finish with a description of the model that's in our paper and the technology considerations and economics.
Thanks, Manisha. So as Manisha just discussed, we concluded that a model where the Bank of England does everything from providing the technology right through to dealing with the end users of CBDC wouldn't meet the objectives that we set out earlier. So instead, we need a mix of the public sector, the Bank of England, and the private sector in providing a CBDC. And in the discussion paper, we set out this model that you can see as a starting point, really. So the idea here is, we call this a platform model. The idea is that the central bank would provide the core technology that processes CBDC payments, and this is called the core ledger, and would also define the standards and the regulatory requirements about who can access that platform. Then private sector payment firms, we call them payment interface providers, would provide the interface between the Bank of England and the end users of CBDC. What that means is that the customer service and the innovation in payment services will be provided by the private sector. We think that this approach allows both us as the central bank and private sector payment providers to play to our respective strengths, and it's likely to lead to more innovation and competition in the CBDC system. So let's talk about technology. So the key thing here is we don't let the technology dictate the functionality of CBDC. Instead, we need to think about what is it that we want CBDC to do and what our design principles are, and then choose the technology that is most appropriate. There are trade-offs between the different design principles. For example, between the extent to which CBDC is resilient and secure and the extent to which it's fast and efficient. So we have some very careful design choices to make. We don't presume that CBDC would necessarily be based on distributed ledger technology or DLT. Many existing payment systems run on more conventional centralized technology, and it could be that CBDC runs on more traditional technology as well. But DLT does include some potentially useful innovations, which we could potentially adopt independently of each other. So for example, decentralization may enhance the resilience and availability of CBDC, but it may also have a bit of a negative impact on performance, privacy and security, depending on how it's done. A CBDC may also be able to provide programmable money through smart contracts. So let's have a quick poll. And the question here is, which element of distributed ledger technology do you think would have the biggest benefit for CBDC? Is it decentralization, programmability, cryptography, sharing of data, or actually none of these features?
So thanks, Ben. It's Tom. Again, just waiting for the results to come in. Just a bit over 50% voted. We should point out, of course, that we don't necessarily see these benefits as being mutually exclusive. It may be that these benefits can all apply at the same time, but a really important thing for us here is to get a sense of stakeholders' views on what really matters to them around the benefits of central bank digital currency. This is something which will be really critical as we start to think about the case for CBDC in the UK. So results there have come in. Programmability has come out just slightly ahead of decentralization. Programmable money could have some really big benefits, and it's certainly something we're very interested in, along with things like micropayments. This could be a big feature of central bank digital currency, but equally could be true of other types of more conventional payment methods, perhaps enabled by digital wallets, or indeed by private digital currencies. Decentralization has come in just slightly behind programmability. Again, another topic which is interesting to us. And then sharing of data and cryptography, pretty much neck and neck. And then none of the above has come out last, but perhaps through the questions we can start to explore some of the other benefits of distributed ledger that people may see. We should also just underscore, though, the point that Ben has already made, which is we do not presume that distributed ledger would be the technology basis for a central bank digital currency, but we do think that distributed ledger technology has some features that could be very interesting for us. So Ben, Manisha, back to you.
Thanks, Tom. So as Manisha mentioned earlier, CBDC comes with benefits and also risks. Obviously, CBDC would only have benefits if households and business use it and use it to make payments. What that means is some shift from commercial bank deposits to a central bank digital currency is inevitable, but if CBDC is too attractive relative to bank deposits and everybody adopts CBDC and stops using bank deposits, there will be significant negative impacts on bank funding and on the cost and quantity of loans and credit that banks can provide. That would in turn have a negative impact on the economy as a whole. So we need to design CBDC in a way that maximizes the benefits whilst minimizing those negative impacts. Now, fortunately, there are some economic design choices that we can make when designing CBDC to affect how attractive CBDC is relative to other forms of money and bank deposits. So for example, choices about access, who can hold CBDC, remuneration, which is whether CBDC bears interest or is non-interest bearing like cash, whether there are limits on the amount of CBDC that can be held or potentially the amount of CBDC that can be transferred, and how easy it is to convert between central bank digital currency and other forms of central bank money, and also between CBDC and bank deposits. So let's have another quick poll. So the question is, which design choice do you think would be the most effective way of influencing demand for CBDC? Access, remuneration, limits, or convertibility?
So some important questions here for us as a central bank, which will be really central to how we think about design of CBDC. So just up to nearly 50% of people have voted so far. So we'll just give a couple more seconds for the votes to come in. But these are really core things that we're thinking about in the Bank of England about how we design CBDC. Understanding the demand for a central bank digital currency would be an absolutely crucial thing for us to do as the central bank. So this is a really key question for us. So just waiting for the final few results to come in. So there we are. So again, pretty close between convertibility, how easily it can be converted into cash, and access, 35 and 32%. Then again, quite closely behind is remuneration, whether or not it pays interest, absolutely key topic. And then some way off is limits around how much CBDC a person could hold. All of these are very relevant considerations for us, really important parts of the economics of CBDC and things we'll be thinking about very carefully. So those poll responses have been incredibly helpful. We'll certainly be thinking about them very carefully. I will now just start to wrap up before we head to Q&A. And we've had loads of questions, which is absolutely great. So next steps for us are, we really want your thoughts, your feedback, your perspectives, your advice on how to think about central bank digital currency. We have designed this process to be as interactive as possible. We recognise the importance of this topic and that having feedback from stakeholders across industry, across academia, across think tanks, and also from the general public is absolutely essential. So this is really important for us. We really want your thoughts on the benefits, the opportunities, but also the risks and downsides of central bank digital currencies. We really want to think about opportunities and risks for monetary and financial stability. We want to think and get your feedback on some of the very practical and important questions around functionality and provision of central bank digital currency, and of course the technology choices that we may face. The discussion paper is open until the 12th of June this year. Really encourage you to respond to that. And if you'd like to send responses, please send it to cbdc@bankofengland.co.uk. So with that, we are going to move towards questions. And I will ask Ben and Manisha to have a first go at questions. One of the most frequent questions we have had, which I'll just take up front, is can people have a copy of this presentation? The answer is yes. It will be possible to watch this webinar back afterwards if you want to refresh yourself on what was said. So yeah, the presentation is available. And how you can engage with us, as I said, there's the email address there, and we are very interested in hearing your views. And a final question has been around timelines. We will have the discussion paper open until the 12th of June, as I mentioned, and we'll be very interested in hearing views, and then after that we will consider what our next steps will be. So perhaps to kick off on the questions which have been asked, there's been a lot of questions around distributed ledger. So perhaps, Ben, I could ask you to kick off with just explaining what the bank's view is around distributed ledger, and also how we think about specific commercial proprietary distributed ledger vendors who may want to work with the Bank of England.
Thanks, Tom. I would say at a high level, we do see potential from distributed ledger technology. I think what we've learned over the last few years is that DLT is not necessarily one package. So as we described earlier, there are different innovations and elements that go together to make up a distributed ledger system. And you can adopt some of these into traditional payment systems where they have advantages. In general, to date, the distributed ledger technology platforms that exist don't perform quite as well, or don't have quite the same capacity as some of the more conventional payment systems that run today. And when we looked at this very closely a couple of years ago with regards to, so the bank is engaging in a big program to rebuild the RTGS payment system. And we looked closely at that time at whether DLT solutions could provide the basis for the new RTGS system. What we concluded was at the time they weren't, the technology was not quite ready for what is essentially a critical piece of national infrastructure. But what we committed to doing with the rebuild of RTGS was to ensure that new payment systems that are built on distributed ledger technology can plug into the new RTGS system. So the new RTGS will be interoperable with distributed ledger platforms. As I mentioned earlier, we don't think that, so if we go ahead and build a CBDC, we have quite specific requirements, and it's unlikely that we could just take a existing DLT platform off the shelf and use it as is. So we don't start with the technology, we start with our requirements and what we want CBDC to do, and then we would design the technology around that.
So thanks, Ben. I mean, the only point I would add to that is that in the Bank of England, we're very interested in understanding commercial and proprietary technologies. We recognise that some of the most advanced thinking, some of the most outstanding expertise on technology would exist outside of the Bank of England, but we have to make sure that our engagement is in a way which is fair, transparent, and is also making sure that everybody has an opportunity to give us their expertise. So perhaps moving on from technology, Manisha, a question we've had quite a lot of is, have we done any consumer research? How are we understanding what users of central bank digital currency might want? So Manisha, perhaps you could just give us a sense of that.
Great, thanks, Tom. So I think that's a really interesting question, and it will definitely be important to kind of consider what the demand for a CBDC will be, and how people will intend to use a CBDC. I guess at this stage, here in the UK, we have done most of the research. Most research that we presented has been in this paper to get that feedback from industry on how they see the business model and the business case being for a CBDC, and kind of how viable it is to create something of this sort of structure. So I think this is for us kind of a really important step in kind of getting wider views before we would take kind of some further research, potentially some focus groups later on, kind of once we've further developed. So yeah, thank you.
Thanks, Manisha. Absolutely right. I mean, understanding what stakeholders, what users think about CBDC, what they think about other payments methods which could improve payments, and what people, what functions people would like is absolutely essential to what we're doing. Ben, we've had quite a lot of questions about the distinct but related topics of privacy and anonymity. Could you just set out a little bit of our thinking about the questions of privacy and anonymity?
Yeah, of course. So this is something we've thought about quite a bit. So a lot of people, when they talk about CBDC, they start from an analogy to cash, essentially. And cash, as you know, there's no data that's collected when a cash transaction is made. So cash is, in many cases, an anonymous means of payment. Some people draw that analogy and conclude that central bank digital currency must also be anonymous. However, there are regulations around money laundering and illicit activity that all electronic payment systems have to comply with. And what that means is CBDC would have to be designed to be compliant with these regulations. at the same time, we want to ensure that the users of CBDC can be confident about the privacy in their payments and what data is shared and on what basis and with whom. So there's a balanced tread there between it's unlikely that a central bank digital currency could be completely anonymous, but we would like to design something that respects users' privacy and gives people control over their data. Now, I should say that questions about privacy are not entirely within the Bank of England's remit. There are other government parts of government who have a significant stake here, and also some of these questions may also be for Parliament. So there would need to be a wider conversation about what kind of privacy should be used in a central bank digital currency.
Thanks, Ben. So I think really just to underscore, privacy and anonymity are clearly closely related topics, but somewhat distinct. The key thing for the Bank of England is to make sure that if we were to do a CBDC, and it is an if, it absolutely respected people's rights to privacy. And as Ben said, that's not something which is within the gift of the Bank of England to decide on its own. That would be something where we would have to make sure that we consulted and worked very closely with government, with society, with our elected representatives to make sure that we thought about these questions very carefully. So the next question, Manisha, is what do we see the role of the private sector being, particularly around people who may be interfaces or interacting with the Bank of England to provide CBDC payment services?
Great, thanks, Tom. So I guess, as we said, that we think there'd be a significant role for the private sector here, especially towards kind of the user-facing services. And I think that we've kept it fairly broad at this point because we'd kind of be interested in seeing all the models that private sector are thinking about in terms of how they would deliver a CBDC to users. In terms of kind of the model that Ben outlined, you know, we had this idea of a platform model where private interface providers would connect via an API to the central bank's core ledger to provide those transactions. Now, the way that those payments might work is definitely still up for discussion in terms of whether every transaction would need to go through the ledger kind of in real kind of gross, or whether they could be net settled, but at the moment we think that it will be kind of real-time gross settled through the core ledger. In particular, I guess we want to make sure that the payment interface providers can continue to provide kind of inclusive services that are extensible kind of for future payment needs. So the poll showed that kind of people thought that meeting future payment needs was a big motivation for a CBDC. So in particular, we'd kind of be looking at kind of what offerings private sector could provide in terms of maybe smart contracts and programmability. Also maybe things such as micropayments, which are a bit more difficult today using existing payment systems. So definitely be interested to hear more feedback about this from people. Thanks.
Thank you, Manisha. So Ben, another group of questions, and I'm bundling these questions together because we've had a lot of questions, which is absolutely fantastic. So there's I guess a strand of questions which are, is the Bank of England doing this because the bank doesn't like cryptocurrency in some way? Is it a view that money should only be provided by the Bank of England? Or is it that the Bank of England doesn't like private monies, doesn't like things like stable coins? So maybe you could just set out, Ben, a bit of our thinking about motivations there when it comes to comparisons with things like crypto, stable coin and private money.
Yeah, of course. So I think we've talked about cryptocurrencies a lot over the last few years, and with regards to things like Bitcoin. So when Bitcoin first really got attention in the press and in the media, there was a lot of discussion about could Bitcoin and similar cryptocurrencies replace national currencies. Now, I think what we've seen is firstly that Bitcoin in particular does not have the characteristics that make it a good currency. So for example, it's not a stable store of value. it's not widely accepted, and nobody really uses it as a unit of account. It also doesn't have the capacity right now to process the volume of transactions that you would need for a national payment system, for example. So we have, we've publicly said that we don't consider Bitcoin and those similar cryptocurrencies to be really a currency or really a form of money. That doesn't mean that it's impossible for somebody to improve on that technology and create something that much better fulfills the qualities of money. And so, for example, we've seen proposals over the last year from large technology firms, for example, to build payment systems and crypto assets that could function much more as stable money. Now, some of those proposals may introduce new risks, and it's important for us to look at that and say, if these proposals are responding to a real need, for example, some weakness in existing payment system or some category of users that are not being served by the existing payment systems, there may be a role for the public sector in addressing some of that need, as well as just leaving it to the private sector. So this really has generated a lot of interest in ideas like central bank digital currency. What I should also say is that, as we describe in the discussion paper, we're very interested in whether central bank digital currency can provide benefits complementing existing payment systems, and also how those payment systems will look in 5 or 10 years from now. And we're thinking a lot about what kind of payment systems are needed in the future and what those future payment needs will be. So there's a wide range of motivations for doing this work right now.
Thanks, Ben. I mean, I think that's absolutely spot on. So the bank has been very clear about its view on current generations of crypto assets, which is that they do not fulfill the functions of money, but there are a group of people who may choose to use them as a speculative investment or for other purposes, but they need to be clear that current generations of crypto assets do not, in our view, meet the functions of money. Looking to the future, there is clearly interest in stablecoins, and the Financial Policy Committee of the Bank of England has been abundantly clear that where a stablecoin is used at scale as a mainstream payment mechanism in systemic payment chains, then it should have the same safeguards and protections and be regulated to equivalent standards as existing forms of money, which are typically commercial bank money paid through recognised payments institutions or central bank banknotes. So perhaps turning to Manisha, if you could, Manisha, just give us a sense of, we've talked a lot about opportunities of central bank digital currency. What are some of the downsides? What are some of the risks that the Bank of England is thinking about? And in particular, how are we thinking about what the possible impacts might be on the banking sector?
Great, thanks, Tom. So yes, alongside kind of some of the opportunities are definitely some challenges. So kind of in particular, we think about challenges to monetary and financial stability, and in particular, kind of thinking about balance sheets of both the central bank and the commercial banks as well. So kind of Ben kind of outlined some of the kind of risks of large volumes of commercial bank money moving into the central bank balance sheet. It's definitely something that we have to manage through some of the design choices. And secondly, we have to think about the wider credit creation in the economy. So kind of thinking about what happens to bank funding. All of those things will kind of hinge on how well we design this and how well we kind of optimize some of those levers that kind of mitigate the risks. And it'll be really important to kind of get feedback from both the commercial banking sector and also do some more in-depth research here at the bank and kind of how those things kind of really work in practice.
Thanks, Manisha. That's exactly right. Very interested in what central bank digital currency will mean for monetary and financial stability. we recognise there is the potential question of substitution of bank deposits for CBDC and the role of credit creation and fractional reserve banking. At the same time, we do have public policy goals around people having inclusive, effective, efficient, convenient payment methods. So we are very much up for exploring the opportunity, recognising it will have some knock-on impacts, which we will have to think about very carefully. Ben, turning to you, there's a question, are there any countries which have kind of moved towards implementing a central bank digital currency, or are seen as being quite advanced in their thinking about how to do one?
Yeah, so one country that is probably at the front of this conversation about central bank digital currencies is Sweden. So in Sweden, the decline in use of cash as a means of payment is much more advanced than in countries like the UK. And actually around 50% of retailers in Sweden expect that they will no longer accept cash by 2025. So that has led the Swedish Riksbank to really consider whether a central bank digital currency, or as they call it, an e-krona, could meet some of those needs, particularly of users who are currently reliant on cash and people who would be disadvantaged if cash falls out of use. I wouldn't say that any country yet has actually introduced a fully functional central bank digital currency, but looking at countries in a very different situation to Sweden, so countries where cash is still very widely used and very few people have bank accounts or access to electronic payments. Now, in some of these countries, the central banks there are considering a central bank digital currency as a way of increasing financial inclusion and giving access to electronic payments to those people who currently don't have. So different countries have very different motivations here. Nobody has actually introduced a fully functional central bank digital currency yet, but lots of central banks are experimenting with the technology and learning how this might work if it becomes something that we feel needs to be done.
Thank you, Ben. So I think on a related topic, and recognising that the motives for introducing central bank digital currency or exploring it at the least vary from country to country. So we've had a number of questions about COVID and the current situation, but also a number of questions about the more long-term trends in cash. From my perspective, I think we should be abundantly clear that we were working on this topic a long time before COVID came into view. And the work that we have done here has not been motivated by the coronavirus. That said, we are aware that there is the possibility that the experience of the coronavirus will have impacts for how people choose to pay and perhaps longer term perceptions of payment methods. But our work here has not been motivated by COVID, but clearly we will take account of what it might mean for payment methods and for what people's payment preferences may be in the future. Looking to the longer term question of trends in cash, as Ben said, there is a decline in use of cash in the UK at the moment, not quite as progressed as it is in some Scandinavian countries, but we do recognise that how people choose to pay is changing quite significantly. Our point here is absolutely kind of clear. I think that cash will be available for those who need to use it. It's an important part of people's lives, but we also recognise that digital payments are very, very important to a majority of people now in this country, and that digital payment methods, which could include a central bank digital currency potentially, and it's something we're exploring, must be resilient, must be inclusive, and must be secure. Perhaps turning to Manisha. Manisha, question mark about why we haven't mentioned in our use cases and benefits things like tax, the possibility of government payments being made via a central bank digital currency, or questions like universal income. perhaps you'd just like to set out sort of some reactions to that.
Sure, thanks, Tom. So I think they're all obviously very interesting questions about how we could use a CBDC, especially if we were utilizing things such as kind of smart contracts and programmable money. I guess the reason that we haven't kind of covered them here in this paper is that a lot of those sorts of decisions, alongside some of the ones that Ben mentioned around privacy, do require kind of further conversations, both with kind of authorities and government on kind of their appetite for things like that, but also involving them in that decision-making process and analysis. It's not something that's solely within the bank's remit to kind of consider. And we've definitely taken kind of a viewpoint on the things that would kind of support monetary and financial stability, but we do kind of see that there might be wider opportunities for kind of the public sector in a central bank digital currency. And kind of we'll be liaising on kind of all of those kind of thoughts and feedback with them in due course alongside private sector feedback. Thanks.
Thanks, Manisha. So Ben, one of the big ones. What's the Bank of England's view or current thinking on the question of remuneration of central bank digital currency? What sort of thinking have we done on that so far?
Thanks, Tom. Yeah, so this is the question of whether a central bank digital currency is non-interest bearing like cash, or whether there should be some interest rate on that. As I mentioned earlier, the level of interest that's paid on CBDC, if any, would be one of the factors that affects how much demand there is for CBDC. And that means it's very important for us to consider this when we're thinking about what impact this would have on the banking system and on the way that we implement monetary policy. We haven't come to a view yet, to a final view, but there is a lot of work that we are doing on understanding what impact remuneration could have, and then working through the consequences on, for example, the cost of funding and the level of credit provided by the banking sector, and also on the level of risk that would be taken onto the central bank's balance sheet as well. So it's a very important question and quite a complex area of research, and there's a lot more work for us to do here.
Thanks, Ben. That's exactly right, and clearly very topical at the present time. And I think what we should also make very clear is that there are monetary policy choices which are made by the Monetary Policy Committee. None of the presenters on this webinar are members of the Monetary Policy Committee, so we're not responsible for setting interest rates. But I think it's also worth distinguishing between the possibility of central bank digital currency as a means of implementing a monetary policy choice versus those who set the strategy and make the decisions on monetary policy, which is none of the presenters today. So we're nearing the end. Perhaps, Manisha, you could just give us a bit of a sense of how we think about resilience and cybersecurity.
Thanks, Tom. So, of course, resilience and cybersecurity are going to be at the heart of kind of some of the design principles and objectives kind of for the system. Kind of in terms of resilience, we're talking about kind of operational resilience, but also things such as liquidity and credit risk, making sure that a CBDC system kind of meets resilience in both kind of those aspects. And then in cybersecurity, of course, as we kind of consider CBDC as a potential payment system in the future, we need to kind of be aware of making kind of be aware of the risks kind of in building that system and making sure that it's kind of fit for the future in terms of being secure against potential risks, just like we do with kind of existing payment systems. So kind of as Ben mentioned, the bank is responsible for the real-time gross settlement service, or RTGS service. And in the same way that we rely on keeping that resilient and secure from cybersecurity risk, we would need to kind of implement those same principles for a central bank digital currency. So definitely kind of a very high priority for us, some of the first principles there. And it will be very important in kind of considering what technologies we might want to explore for a central bank digital currency. Those would be some of the key requirements for it as well. Thanks.
Cool, thank you. So I'm going to pick the final two questions, which we'll do quickly. Perhaps Ben, could you give us a sense on whether we've got any views on the possible environmental impacts of a central bank digital currency?
Yes, of course. So I mean, firstly, this question normally comes from thinking about Bitcoin and the very high energy usage that you see in Bitcoin and similar cryptocurrencies. So as I mentioned earlier, we would not be basing this on the same technology. So for a start, whatever technology a central bank digital currency ran on, it would be significantly more energy efficient. Energy efficiency is a big question around data centers and how you make sure that those systems are as efficient as possible. And the same consideration that applies to any kind of data center or technology infrastructure would have to apply to CBDC as well. So it would need to be designed to be as efficient as possible.
Thank you, Ben. And then the final question before I wrap up, Manisha, is over to you. Is the Bank of England interested in the possibilities of wholesale central bank digital currency as well as retail?
Great, thanks, Tom. So wholesale CBDC is definitely something that a lot of central banks are exploring, both alongside a retail CBDC. Obviously, our paper here didn't focus kind of on wholesale aspects, primarily because there are other things that are happening in this space within the Bank of England. So, for example, we've kind of touched on our ongoing renewal of the RTGS service. But also, I guess that there are other ways that we could be exploring a wholesale CBDC. So in terms of some of the cross-border work that's happening internationally, in groups such as the G7, and also kind of thinking about new ways that we could implement technology as well for current payment systems that we have, such as the RTGS service or things like our high-value payment system. So in terms of the scope of this paper, not really considering it. But mainly because there are other things that are happening alongside this as well.
Thank you, Manisha. Thank you, Ben. So I'll just round out the last couple of questions. I guess we've had a couple of questions which are polls of the views on central bank digital currency. So one question has been: is central bank digital currency an opportunity for the UK, particularly after Brexit? I think the answer to that one is our interest in central bank digital currency is not motivated by Brexit, but it is definitely motivated by opportunity. That's not a sort of competitive thing. We really think that countries should be collaborating rather than competing on central bank digital currency. But we do see a big possible opportunity around more inclusive payments, more effective payments, new opportunities for promoting monetary and financial stability, and also encouraging innovation, competition, and a flourishing digital economy. So it's not Brexit that we see as the opportunity, it's the opportunity of central bank digital currency itself, which we have to weigh very carefully against other sorts of payments innovations, which may be equally as good. The other question we had is this a huge white elephant? And our answer to that is we hope not. What we are really committed to doing, though, is to making sure we really thoroughly understand it, that we have very closely engaged with stakeholders, and make sure that all views, perspectives, expertise is taken into account, because the topic of central bank digital currency is absolutely huge. So we've got 1 minute to go. I will wrap up at this point. There have been a couple of questions about will the recording and slides be available? The answer to that is yes. And there's also been a question about the number of attendees. So there are around 1,200 people on the webinar. So that's been really great and a great opportunity to engage with people. I will close the webinar here, other than just to remind people once again that if you want to comment on our discussion paper, it's open until the 12th of June. And you can contact us on cbdc@bankofengland.co.uk. Thank you very much for listening to us today. Thank you to Ben and Manisha for presenting. Hope you all keep safe and well, and we look forward to speaking to you again soon. Thank you.